Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere Asset Management, bringing you your daily market insight video here on Thursday, July the 14th. And it was another day of a major reversal off the lows, actually the second day in a row that we've seen that, primarily led by the NASDAQ. And so we had Apple really leading the way today. And the big question today, and what we're going to talk about, and something I've talked about before, is whether or not Apple is the most important stock right now, because it certainly was today, really leading the indices higher, while about 85% of stocks were down today. So we're going to talk about why or how Apple might be the most important stock in the market right now. We're going to look at this big reversal off the lows, and we're going to get into the performance right now. So G6 down 0.9, S&P, which was down around 2% at the lows, down 0.3. QQQ, the only one that finished green, as you can see, up 0.36. Dow down a little less than 0.5%. Mid and small caps down a little over 1. 60/40 also down a little less than 0.5%, and protection down 0.08 today. Market state still correction, no change there. Still below the key moving averages on all the major indices. The Qs are getting real close to the 21 EMA, but still below all those major moving averages, given some of the action this week. And then we have no changes to the trend gauge from Don's video on Tuesday either. Market leaders, we saw some constructive action out of some of the names that have acted well. So market leaders still remains neutral, but the other three, short, medium, and long term, all remain down. So before we get to the charts and we look at all these good stocks I've got ready for you guys today, we're gonna go through and we're gonna talk about Revere just real quick, and then we're gonna get to the tail of the tape. As I do in every video, if you have any questions on anything I say, you want to know more about a certain stock, a certain sector, why our analysis was the way it is, whatever it is, just send me an email. I'm happy to respond, or you can email anybody here, Meryl, Dan, Don, or Tim at revereasset.com as well. So let's get to the tail of the tape. Again, the headwinds still remain the same, and I do have the S&P over on the right-hand side, as I normally do. But what we've got here is we're going to first go through the sentiment. So we opened up the day with the VIX up about 4 or 5%. By the end of the day, given the reversal, we actually had the VIX down a little bit, right around this 26 level. Put call ratio, really nothing doing. It's been living in this 0.9 to 1 range. If you watch my videos, you know I've been saying that for a while. We did see it move up pretty high this morning to about 1.3-ish as the market was at its lows, but it came off pretty quickly to kind of finish near the bottom of the range. Fear, greed, unchanged at a 23. So we're still kind of in the bear case here, even though we got this reversal higher, right? We're consecutive closes below these key moving averages. We broke these recent lows, so the pattern of higher lows is not intact anymore. But you can't discount the fact that we had a strong close today and we finished well off the lows. It somewhat has some similarities to the pattern we saw here before we ultimately rallied. But again, not making a prediction, just pointing out that there are some similarities here, but again, still below these key moving averages. And the main thing is we're below this key 3,800 level. That's the big line in the sand to watch here. So news-wise, PPI came in a little hotter than expected. Had some comments from the Fed's Waller regarding 75 basis point hike. There's been a lot of speculation over the course of this week as to what the next rate hike is going to be. Is it going to be 75? Is it going to be a full percentage point? And really, it's going to be something that's going to be in focus for the market. So keep paying attention to that. Any commentary around that is going to impact and move markets, at least in the very short term. What were we watching today? S&P versus support 1 at 3,800. We went right through that, at 3,800 to 3,813, 3,815 level with the gap down this morning. And we also sliced through S2, which is the 3,740 to 3,750 area. We're below the S1 still ever so slightly, just by about 10 points or so, but we undercut and reclaimed S2 on QQQ. We were watching versus 280. That was basically the low of the day, closed right on that fib there, 286.82. Not quite up to the 21 EMA, however. Action-wise, opened down 1.3, ended up moving down to 37.21, which is about a 2%. S&P was down a little over 2% at the lows today. You have a sharp move up to 37.70, pull back to 37.43, and then we basically trend higher into the close, where we closed at right around 37.90. So Low to high today, 37.21 to 37.96. Again, no surprise, volatility has become very normal, even on the indices. It's just very normal to see the Qs or the S&P move up or down 2, 3, 3.5% on a given day. So notes wise, we got the gap down low from the CPI here. That's 37.49 to 37.59. We undercut and reclaim that. US dollar moving higher, and there's some legislation regarding chips sparking semiconductors today. So we already went through the performance here again. S&P opened down 1.3, finished down 0.3, G6 down a little under 1%, 60-40 down about a half, Protection down 0.08, excuse me. SOX and XLK, that's the technology sector, green today. USO / XLP also squeezed out a green close there just a little bit. Natural gas also trying to go green. And then 9 of the 11 major sectors, excluding XLP and XLK, were red today. The main ones in focus: oil's having a tough day and fertilizer's having a tough day. Portfolio wise, beta is now at 0. We closed out GLD. Bottom line, big bounce off the lows, large caps lead. And what that means is the big heavyweights that dominate the indices, like Apple, Microsoft, Tesla, those types of names, mainly Apple today, were the ones that were leading the indices off the lows. And then lastly, we'll get through this quickly here. Today's close, 37.90, big bounce from the lows, key resistance ahead, and I'm talking about that 3,800 level right here. So S&P now just about 4% below the 50, 1.5% below the 21. As you can see, when I talked on Monday that if we start to live below these lows, you've got a chance of the 21 and the 8 rolling over. That has occurred. Doesn't mean that we cannot still reclaim them, but now they're starting to angle down and will present resistance as well, along with this 3,800 level. So first step for the bulls, S&P's got to reclaim 3,800 to the 3,815 range. That's the first big step. Then you've got these moving averages to work with here. 50-day continues to move down pretty sharply now, right around 39.45, I believe, if I'm not mistaken, 39.43. So S&P, first step, got to get back above 3,800, back above the 38.15 fib. And also, again, now that we put in this low here, basically kind of undercutting these lows, you're going to want to set alerts at today's low. If that's broken, it could get nasty. But again, same thing we saw today. It got pretty nasty after we broke yesterday's low, but we ultimately finished higher here or finished with a nice reversal. But again, 3,800 is the big level to focus on here for the S&P. Sorry about that. Let's get QQQ up here. I mentioned it was a lot closer to the 21, basically butting its head right up against the 21 and the 8, just a little bit below, and right up against that 286.82 fib. You can see this acted better today. It did not undercut the lows by as much as you saw there with the S&P. Pretty much held this 280 level. If you look horizontal at the line I'm drawing, pretty much held up right there. QQQ acting and looking much better than the other indices for the time being. DIA down about 0.5% today. Very similar look here to what we see with the S&P. We've got the 8 rolling over, the 21 rolling over as well. Same situation here. This corresponds to roughly the same level, or the 3,800 level on the S&P. This is the low from back in May. So you want to see the Dow or DIA definitively get back above, call it the 306 to 308 range, which is kind of correspondent to the 3,800 level. So again, very similar pattern to what we see with the S&P here on the Dow, and mid caps and small caps are also going to look pretty similar. So again, undercut the recent or yesterday's low by a good bit, closed at the top of the range. Mid caps actually continuing to look weak. See the angle of this RS line here? They're still way below their May low compared to the S&P, compared to the Qs. Some significant weakness since this drop down here. So mid caps continue to kind of be the weakest of the major 5. That's something we've been talking about for the last couple of weeks. And then here we have IWM. I mentioned this 168 to 170-ish level. That's the big level to reclaim, basically closed right on it. Very, very similar pattern to the S&P here. So again, first step for the S&P, get above 3,800. For IWM, get back above 170. Then you got to start working with these now declining short-term moving averages. So nonetheless, a strong close from the indices and most stocks today. However, I mentioned UUP breaking out. It did pull back off the highs. It's very extended in the near term, but this is a major move, breaking out over the 2020 highs and just getting a definitive breakout move over this 28 level. The dollar continues to be a headwind, at least in the near term, for stocks. And really, when we saw stocks and the indices start to rise off the lows today, it's because the dollar was starting to pull back on an intraday basis. And I'll show you a 5-minute chart of what I'm talking about here. We pretty much gapped down nasty on the indices, I'd say the first 15 to 20 minutes, and subsequently started to turn around. And that kind of corresponds to what you see here. The dollar had started selling off sharply. Stocks and equities started to turn around pretty nicely as well. And lastly, before we get to stocks and the rest of the stuff here is TNX, the 10-year note. And remember, I said, watch and see if this has some struggles here with the 3% level. It has. Doesn't mean it's not going to ultimately be able to reclaim this and continue its uptrend. But for the time being, just clustered up here all around this 3% level. A lot of indecisive action, hasn't really made a definitive move one way or the other. So keep an eye on how TNX acts here, the 10-year note around that 3% level. So we're going to get right into it. We're going to talk Apple right out of the gate here. And I think you're going to see why I said it might be the most important stock in the market right now. So RS line blue dot today, you can see the way this RS line has moved up sharply since about the beginning of June, since it made this low here. And Apple today really led the entire markets higher. Apple dominates the indices. They're the biggest market cap company out there. And this is a major component of the S&P and of the NASDAQ. And as you can see, really strong action today over this high here for a brief period of time. 148.45 was the level to clear. It did that. And it pretty much kind of bounced off the confluence here of the 50 and the 80 MA, along with the 21 that's starting to hook up. So Apple, for the time being, has made a really nice run, is leading kind of the markets higher. And today it certainly helped propel the indices off the lows. It was really bucking the trend all day long. It was only down a little bit relative to the S&P and the Qs this morning, and started to reverse and turn green and really never really looked back after that. And I'll show you a 5-minute. It's a pretty parabolic looking chart from Apple off the lows here. So again, just down here a little bit at the open, about 1% or so, and then just rocket boosters here and never really looked back. So a strong move from Apple, really leading the market. And the reason I say this might be the most important, I would really pay attention to what Apple does over the course of the next few days here. If Apple continues to move higher and maybe takes out this 150 level and along with this 150-174 pivot, that could propel the indices higher as well. So keep a close eye on Apple. If this rolls over and starts showing weakness, it could spell trouble for the indices. But if this continues to move like it has been, it may just lift the indices higher as we continue to move here. So Apple, very important. I think it's worth focusing on. Again, I would set alerts at the lows of yesterday and the lows of today. That'll give you an idea as to whether or not it's rolling over. Conversely, I would set alerts around 150 and then 150-174 to give you an idea of if Apple is moving up and out and continuing to show relative strength like it has been for the last month and a half. So Apple, very well, maybe the most important stock right now to pay attention to. Also, just the biggest stock in the market, so it's always going to be important. Moving along here, we mentioned chips. Semiconductors having a good day. AMD got an upgrade. They were up about 1.5% today. NVIDIA, another name that was bucking the trend today, up about 1.5% today. Qualcomm also having a really nice day, up over 4%, as you can see here. And then Taiwan Semiconductor had a earnings report that was well received, and you can see that is also up nicely today. So semiconductor showing some life. But again, this has been a sector that has been absolutely crushed. I mean, Taiwan Semiconductor is a huge company, nearly $500 billion, and they've gone from 145 to 75 at the lows not too long ago, right in here. So a pretty steep decline for a company of that magnitude. But semiconductors showing some life today. We also had, oh, sorry, that is the short version. We want the regular version. Bitcoin, a little bit of life today too, off the lows here, up about 5%. Actual Bitcoin pushing back up over 20,000 today. So cryptocurrency showing some life. Costco and BJ's Wholesale Club also having a good day. Costco up 4%. You can see the volume here over the last few days or few weeks some nice looking big blue bars there, and then BJ, similar type of action in the sense that it has showed nice relative strength over the last couple of weeks. And again, an RS line blue dot and a double bottom pattern recognition here on BJ's. Some growthier names that had some okay days today, at least relative to the market. LNTH can be a really kind of wild trading one, but continues to trend higher. Celsius ultimately ended up having a pretty decent day too, an inside day, but back above the ADMA, up about 1% or so here. And then Bros, another growth name we've talked about, up about 2.5% here. So some of the growth names showing some life. Another growth name that's in the biotech space we've been talking about, CRISPR, continued its relative strength today, now showing an RS rating of 90, which is pretty astonishing given the action it had all the way through here. Now up about 100% off the lows just 2 or 3 months ago. And then a couple more names here. LLY, nice RS today, up about 1.5%, big time reversal back over the 21 and the 8. And then Shockwave up a little bit today. Again, some relative strength versus the indices. So there's some of the positives, but it wasn't all positive out there. Areas like oil having a tough day today, as you can see here. Didn't finish down all that bad, but the XOP was down about 4%. A lot of individual names finished off much worse than the indices. Here's DVN, not much different, down about 2.5%. FANG, another name here, down about 3.5%. So the oil stocks continue to have a tumultuous time, especially considering the nature of this drop that a lot of these stocks have had. Over the last, call it, month and a half, you've seen a lot of energy stocks suffer 30–40% pullbacks or so. And of course, no exception here with FANG. Moving along, not all growth stocks had a great day today. Some were not so pretty. GTLB down a little over 3%. DOCN, DigitalOcean, which got I believe a downgrade and then has subsequently performed very poorly, down about 7% today. Dynatrace, down about 5% today. So again, it wasn't all pretty out there. Some growth stocks showing some strength like Lantheus and Bros and Celsius, but not all. So I just wanted to point out a few examples there. I mentioned we sold gold. It lost this key 160 support level, a gap down below it. Some more names that struggled today. Meta, from a large cap standpoint, this one did not participate, down 3.3% today. JP Morgan reported earnings and it wasn't all that great, down about 3.5% today. I believe the guidance was not spectacular as well. And moving along to the last couple here, fertilizers, tough day today. CF down about 6%, all the way back down to this 200-day moving average. MOS, the other big fertilizer name in here, down about 6% as well. You can see these have had a precipitous drop from 79 to now 43, almost a nice 50% haircut for MOS. And actually, if you look at this low here, it did have a 50% haircut in just a couple of months. And lastly, here's defense stock struggling today as well, showing some relative weakness. RTX, you can see the gap down there. NOC, also down about the same, 1.5 to 2%. But again, a mixed bag today. There was a lot of stuff that was down. There was some stuff showing big time relative strength, like Apple, for example, or semiconductors, Costco, but not everything getting the love today. So a mixed bag, but the positive to take away from today, it was a big positive reversal for the NASDAQ. The S&P finished well off the lows. Now it's a matter of what do we do when we run into these next resistance levels, when we run into these now declining short-term moving averages. Are we able to just blow right through them and get above them, or do they present some resistance for us moving forward? So that wraps up today's video. You guys will get the podcast soon. We actually recorded it today. So I will see you guys on next Monday's video. Everybody have a great weekend. Thanks.